Did you know that nearly half of homebuyers regret something about their mortgage? From hidden fees to loan structures that don't fit their financial future, these mistakes can cost thousands. But here's the good news. You don't have to be one of them. Whether you're a first-time buyer or looking to refinance, let's break down the essential home loan advice you simply can't afford to ignore. Now, a quick note. This video is for educational purposes only. A mortgage is a major financial decision, so be sure to consult a professional for personalized guidance. First up, know your loan options inside and out. Many buyers assume a 30-year fixed-rate mortgage is the only way to go, but that's far from the truth. If you plan to stay in your home for a shorter period, an adjustable rate mortgage, ARM, could offer lower initial rates. Meanwhile, if you qualify for VA, FHA, or USDA loans, you might save significantly with lower down payments and interest rates. Understanding these differences can be the key to saving tens of thousands over the life of your loan. Let's talk about credit scores, your ticket to better rates. A high score doesn't just help you get approved, it also means lower interest rates, which directly impacts your monthly payments. For example, someone with a 760-plus credit score might secure a mortgage rate that's a full percentage point lower than someone with a 640 score. Over 30 years, that difference can add up to over $40,000 in interest. If your credit isn't where you want it to be, focus on paying down debt, making timely payments, and avoiding new credit applications before house hunting. Another critical factor? The hidden costs that banks won't highlight up front. Your mortgage payment isn't just principal and interest. You'll also pay for property taxes, homeowner's insurance, private mortgage insurance, PMI if your down payment is under 20%, and maintenance costs. These extras can add hundreds to your monthly bill. To avoid surprises, use a mortgage calculator to estimate your full payment before signing anything. Now, let's talk about why shopping around for lenders is non-negotiable. A study by Freddie Mac found that getting at least 5 mortgage quotes can save borrowers an average of $3,000 over their loan term. Yet nearly half of homebuyers accept the first offer they receive. Different lenders have different fees, rates, and underwriting guidelines, so take the time to compare and negotiate. Speaking of savings, let's touch on the power of making extra payments. Most people stick to their scheduled payments, but even one extra payment per year can shave years off your mortgage and save thousands in interest. For example, on a $300,000 loan at 6% interest, making an extra payment annually could reduce your loan term by nearly 5 years and save over $60,000 in interest. Now let's get real. Is a 20% down payment still necessary? Not always. While putting down 20% helps you avoid PMI and reduces your loan balance, there are great loan programs that allow for as little as 3 to 5% down. The key is finding the right balance between a manageable down payment and long-term financial stability. If putting 20% down leaves you with no emergency fund, it might not be the smartest move. Finally, the golden rule. Don't borrow more than you can comfortably afford. Lenders may approve you for a higher loan amount than is actually reasonable for your budget. Instead of focusing on what you qualify for, focus on what aligns with your lifestyle and long-term goals. A general rule of thumb is that your total housing costs, including mortgage, insurance, taxes, and HOA fees, shouldn't exceed 28 to 30% of your gross monthly income. So what's the biggest home loan lesson you've learned? Share it in the comments. I'd love to hear your experiences. And if you found this valuable, why not hit that subscribe button so you never miss tips that could save you thousands? We think you'll like the video on screen next. It might just help you reach your next financial milestone.